Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, both the indices, that is Nifty as well as Bank Nifty, ended the day on a negative note. Losing 0.35% each owing to the selling pressure in the second half of the session, mainly in financial name along with the FMCG counters from higher levels. Energy as well as pharma relatively outperformed for the day and supported Nifty to hold above its key support levels. India VIX has once again cooled off a bit after the interim budget. The key levels to watch out for in India VIX would be 14 on the downside and 17.75 on the upside. Both these levels are critical, considering that if you see the Fibonacci retracement of the entire down move, that is from 33.97, that is the Feb 22 high, and 8 levels that was seen on May 23 lows. So if you see, it's a Fibonacci retracement. So till India VIX sustains above 14, we could continue to witness choppy moves in the next few trading sessions. The dollar index, if you see the macro factors, the dollar index has surged above 104.35, testing its previous swing highs, while the US 10-year bond yields have also started to sustain above 4.10 levels. Both are partially negative from equity market perspective. Brent crude remains steady between $75 to $80 a barrel. The movement of Brent crude needs to be carefully monitored, with it being one of the most important macroeconomic variables from an Indian context. A quick check on the global markets. The S&P 500 index has witnessed minor profit booking from higher levels. However, key moving averages are in rising mode and in the desired sequence. Hence, until the index is trading above its support level of 4,850, it can trend higher towards the levels of 5,100, followed by the level of 5,190 in the short term. Coming back to Nifty, going forward, the resistance is seen at 21,850, 21,900, while support is placed at 21,600, 21,650 zone, which is the confluence of the 10 and 20 EMA. In case 21,600 is breached on the downside, the index could witness a further slide towards 21,450, 21,470 zone on the downside. While about 21,900, the index could witness an extension of the rally towards the mark of 22,070, 22,150 levels. 21,450 is a key level from a medium term perspective, derived from the upward sloping trend line joining the key swing levels. So coming to the OI data, Nifty futures ended the day down 0.75%, while the OI surged by nearly 0.61, implying short built up, while Nifty PCR is currently at 0.72. Strong put writing is currently seen in 21,700, 21,500 strike, while on the call side it is majorly seen in 21,900 and 22,000 calls, which have seen aggressive addition. So the overall range for the coming few sessions could be 21,550 on the downside and 21,950 on the upside. Coming to Bank Nifty, the 20-day EMA zone, that is the levels of 46,100, 46,200, is likely to act as resistance, while support is seen at the zone of 45,400, 45,500. In case 45,400 breaks, the index can test its swing support placed at 45,150, 45,100 levels. While above 46,200, Bank Nifty could witness a short covering rally towards 46,600, 46,800 mark. If we look at the OI data for Bank Nifty futures lost about 0.6%, while the open interest declined by 1.65, implying long unwinding in the index. Additionally, Bank Nifty PCR is currently weaker at 0.64. Significant open interest build-up is witnessed in 45,800, 46,000 calls, and on the put side it is majorly seen in 45,800 and 45,500 puts, so implying a broad range of 45,400 on the downside and 46,100 on the upside for the day. Coming towards stocks and sectors in momentum, so like we have been highlighting, the oil and gas space continues to do well. The likes of oil, ONGC, BPCL witnessed strong traction on the charts in trade yesterday. From the broader market, if we see, bullish setup was observed in Power Grid, Coal India, Tata Steel, Dr. Reddy, Hero MotoCorp, SAIL, Torrent Power, Lupin, Hind Petro, Biocon, Maxell, Bharat Forge, NMDC, IPCA Labs, and Cummins India. So all these counters witness good traction and are currently relatively outperforming on the short to medium term time frame. Coming to the FII DI data, in the cash segment, FIIs bought to the tune of 518 crores, while DIs sold to the tune of 1188 crores. FI long short ratio for index futures has improved to 36.21% from 32.5% on a net basis, as they bought about 12,899 index futures. On the stock futures front, FIs have sold to the tune of 14,350 contracts, while on the options front, FIs sold 1,13,033 call contracts and sold 29,710 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.